Hey traders, Mandla here at FX Link. Welcome to our Sunday market preparation. Today we are going to look at two opportunities that Aussie dollar might have for us, both taking a long-term perspective and a short-term perspective, and looking at how to set ourselves up for those opportunities if they meet our trading criteria. So without further ado, let's just jump right into the chart and dive in. Taking a look on the daily time frame of Aussie dollar, you will see that the market is in an early stage of a consolidation, right? So as soon as the market came back to these levels of structure, it shot up, and as soon as the market resistance to these levels, it shot down. So as we see that the market is currently approaching our highest highs, and in a consolidation, we want to sell high and buy low, right? Now, thinking as another trader, because there are buyers who bought at these levels of structure, where would you want to take your profits at? That's right. You would want to take your profits at the current resistance levels right here, which means that there should be what type of orders sitting at these levels of structure, at these resistance levels. Yes, there should be sell orders sitting over these excuse me guys, there should be sell orders sitting at these levels of structure. So since there are sell orders sitting at these levels of structure, long-term buyers who are looking to take off their profits right here, and counter trend traders who are looking to sell over to these levels are waiting patiently for a selling opportunity right here. I would be looking to sell high too as soon as market approaches these levels of structure. Okay, now as we go to the lower time frame, let me go to our 60. Let's jump right to our 60 minute time frame. First of all, we get our equal measured move lining up at our structure level right here. As you would see now, as I take my first leg right here and take my extension, the market should extend over to these levels of structure. Okay, and we get I get my Fibonacci extension level coming over at that equal measured move right here. I get another 1618 inversion lining up. Excuse me. We have our 1414 inversion lining up with our 1618 extension with that equal measured move. All these things lining up at one level of structure. So I will be looking for a selling opportunity. As I change my color, I'll be looking for a selling opportunity as soon as the market approaches these levels of structure. Okay, so as soon as the market does come right here, we will be setting ourselves up for a risk to reward, which is something like this. For the longer term, I'll be taking my profits at these levels, right? So we could be setting ourselves up for 180 to a 214 pips worth of reward on this one, then go 10 pips above this level, 10 pips, we go to 67 and have a 66 to 67 pip worth of risk on this one for the long term. This is a long-term opportunity. Okay, now for the short term, you might have noticed that the market has been making higher highs, higher lows, right? As the market has been making higher highs, higher lows, usually you would be looking for a trend continuation trade to the upside, right? First of all, we get our first high right here. the market makes a higher high right here, our low right here, higher low right here, equal low right here, but we have a higher high right here, then higher highs, higher lows. As the market breaks out, it indicates what? A continuation in that move. So I'm looking for a buying opportunity right over here. So my kill zone would come back to these levels right there, right? Okay, as you can see right now, my kill zone is pretty big, so we would want to narrow it down so we could have a exact point where we will be looking for a buying opportunity. So right now, as you will see right there, we have another equal measured move lining up. As I clone this, taking my leg over here, as we have our equal move terminating at this point, as I took my Fibonacci extension tool from that swing high to this swing low, back to that swing high, what do we have again? We have our 1618 extension right here lining up with that equal measured move. Okay, and as I take my Fibonacci retracement tool from this swing low back to this swing high, as you will see, let me take my levels back, right? 786 lining up with our equal measured move, lining up with our 1618 extension. And as we take our Fibonacci retracement, taking this long-term swing back to our current resistant levels, you would see that we have our 382 retracement lining up exactly where we want to buy at. So we have a Fibonacci cluster lining up over these levels of structure, right? So you might be looking for a buying opportunity as soon as the market approaches these levels right there. So you might be setting yourself up for an aggressive buy opportunity as soon as the market comes over there. You would be setting yourself up for a reward of 74 pips and a risk of 10 pips below these lows. 34, we go to 24. So we have a risk of 37 pips for a reward of 74 pips, which is close to a 1:2 risk to reward. So for the short term, you might be looking for a price to come over here, take profits right here, and if price comes over right here, you might be looking to set yourself up for another shorting opportunity for the long term. So if you like this video, click that like button below over to this channel, share this content, and subscribe to our channel so you could have more of these good stuff lining up for you. So for me, Mandla, I'll see you on the next trade. Have a great weekend.